Crypto staking rewards are, as of April 2024, on average 450% more than the dividends received from the S&P 500, even though both markets have grown. The S&P 500, which is the index that tracks the 500 largest public companies in the US, grew by 10.16% in the first quarter of 2024, which was its best in 5 years. However, the dividend yield rate of 1.36% was much lower, and as you can see here, was at its lowest since 2021. And then before that, you had to go all the way back to the year 2000, so 24 years ago, to find a lower rate, which was 1.12%. And the dividend yield is basically the average dividend payment of all the individual stocks from the S&P 500 index. So they've obviously not been paying as many dividends recently. However, crypto staking, which is essentially where you add your cryptocurrency onto a hopefully DeFi or decentralized platform to gain interest on it, which I did mention in my video on how to earn passive income on your crypto, which you can find a link to here and in the description. Well, the average returns were 6.08% from crypto rewards at the time of the comparison with the S&P 500, and as you can see here, have now dropped to 5.65%. According to the stakingrewards.com website, which is a staking explorer essentially, but it is still considerably higher than the 1.36% dividend yields from the S&P 500. However, it is important to point out that there are some risks involved when staking, so as ever, this shouldn't be taken as financial advice, and please do your own research. But it's not just retail investors who are looking at this difference and turning their eyes towards cryptocurrency staking, because Grayscale, the asset manager that's the self-professed world's leader in cryptocurrency assets, which has seen large outflows of its Bitcoin Spot ETF, mainly due to its high fees when you compare it to other Bitcoin Spot ETFs. And it has also recently been suggested, partly due to Genesis selling its shares as part of its bankruptcy process, but which actually had its lowest daily outflow of about $18 million on Thursday, the 11th of April, 2024. Well, Grayscale has now set up a new cryptocurrency staking fund called GDIF, or the Grayscale Dynamic Income Fund, which is open to sophisticated or high net worth investors. And this means you'd need to have assets under management of $1.1 million or a net worth of at least $2.2 million to use this fund. And this will expose their portfolios to the income generated from staking cryptocurrencies. They've so far mentioned Solana, Osmosis, and Polkadot as the three main cryptocurrencies that will be held in the fund and staked, but there are a lot of other cryptocurrencies making up nearly 45% of the total fund, which are unnamed. The company Staking Rewards, who I just mentioned, does state that Grayscale are using their API for staking rewards data in order to make their decisions for the fund. And they do mention some other cryptocurrencies that are part of the fund, such as Aptos, so APT, Celestia, or TIA, Say, and Near Protocol. So a lot of them are actually layer 1 cryptocurrencies in the fund. And as you can see here, Grayscale states that they will stake tokens to earn cryptocurrency rewards through tokens, and then these staking rewards will be converted to US dollars on a weekly basis, with Grayscale aiming to pay these rewards to investors on a quarterly basis. Grayscale is also one of the asset management firms to apply to the United States SEC for an Ethereum Spot ETF, which so far has been delayed by the SEC, like it did with the Bitcoin Spot ETFs. And the other 6 that you can see here are Fidelity, BlackRock, Invesco and Galaxy Digital, Hashdex, ARK21 Shares, and Vanet, who were the first to apply, and whose CEO, Jan van Eck, which is a great name, said that they think it was very unlikely to be approved by the 23rd or 24th of May, which is the SEC's next deadline, as the SEC still apparently needs to make comments on its published documents, but they haven't heard anything back yet. With Bitwise and Franklin Templeton also recently applying for ETH Spot ETFs, which would make 9 applications in total. So it is looking like this will be a longer process, and we will need to wait and see what happens, because given the recent news that the SEC has served notice that it intends to sue the DeFi platform Uniswap, I wouldn't put anything past them. And Uniswap Labs Chief Legal Officer, Marvin Amori, put out a 7-part tweet on X that you can see here in response to this, debunking and attacking the SEC and its intentions. But that ends this video looking at the increase of staking rewards in crypto. And as always, I'd love to know what you think in the comments below. And if you're interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.